Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the upcoming earnings season and take a look at what happened in the last earnings season and looking at some popular stocks. We'll also give our view on where we expect stocks to go from here, focusing on the potential trading opportunities that the earnings season represents. My name is Sasha and I'm a financial analyst from the research department at 4Trade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, let's talk about market opportunities. If you don't know what they are, allow me to explain. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point, and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. Here's an example of a market opportunity. Here you can see some fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair, such as the resignation of the UK Brexit minister or positive employment figures in the US. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen, that's 1.2840, this shows the right moment in our estimation to come in and open a trading position had you decided to trade on this market opportunity. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is down. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit, and on the right hand side of the page you have calculations. If you close the position using take profit, you can expect these kinds of profits at support 1, 2 and 3. And if the price is going against you, then you can potentially have a loss of this amount shown at resistance 1, 2 and 3, and that's in red. The pivot point is the starting price based on which resistance and support levels are calculated. The support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So, what is the earnings season? Earnings seasons are months of the year when a majority of quarterly corporate earnings are released. Earnings season occurs in the months immediately following the quarter ends results of the year. Earnings season fall in January, April, July and October. For traders, this means that almost every large company on the market will report their results in these months, and depending on the results and previous expectations of analysts, this can have a great effect on the prices of the stocks you trade with, and is therefore a great trading opportunity. The two statistics that are usually considered most important are revenue and earnings per share, and investors will be hoping for a beat. That is, a statistic higher than expectations in both categories. If this happens, a boost in the stock price is more likely. But watch out for what investors call guidance. These are projections for the future. Most large companies hold press conferences after results are published, where the CEO talks about the future prospects of the company. A positive outlook tends to influence the company's stock price higher, and negative noises about the future will bring the price down. As an investor, you should also keep an eye on analysis and price targets, which will give valuations stating whether the current price of a stock is overvalued or undervalued before that company reports its earnings. You can, of course, request such information from your senior account manager. So when do the big companies report? As always, the big banks kick off the earnings season, and this January the big guns begin to declare their earnings on the week beginning January the 14th, with Citigroup and JP Morgan leading the pack, and with Goldman Sachs, Morgan Stanley and American Express reporting towards the end of the week. But many giant companies including Apple, Alibaba, Amazon, Alphabet, that's Google, and Facebook report their results in the last week of January, and the earnings season goes on until mid to late February. Results so far? Well, until yesterday, only smaller companies have reported. But as of January the 14th, that's Monday morning, 4% of S&P companies have reported results, with 90% reporting above expectations earnings and 65% better than expected revenue. This is only a small sample though, and we will know a lot more by the end of the week. But we can talk about what happened last quarter and what analysts are broadly expecting this season. Third quarter results from the S&P 500, that is the USA 500 index, showed that earnings were up more than 25% from the same period last year, with 78.9% beating EPS estimates and 64.7% beating revenue estimates. It was, all in all, a very good earnings season, but couldn't quite match the previous record results of the second quarter. But let's take a look at some of the more popular stocks and how they performed last quarter: Amazon, Tesla, and Facebook. Amazon third quarter earnings beat estimates, but its revenue was a miss, and fourth quarter outlook disappointed investors. As a result, the day after earnings was announced on October the 26th, its stock price dropped sharply by 7.82%. On October the 30th, Facebook announced that it missed revenue expectations, but strongly beat earnings per share estimates. It also issued guidance telling investors to expect increased expenses in 2019. The day after, Facebook's share price increased by 3.8%. Tesla surprised investors, announcing both better than expected revenue and earnings, posting only its third quarterly profit in its 15-year history, leading investors to believe the company had turned a corner, much to the delight of CEO Elon Musk. Tesla's stock skyrocketed by 9%. So what impact can be expected upon stocks? On this chart, you can see previous earnings season growth. You can see the record levels of third quarter 2018 I mentioned. The last figure is the estimate for this earnings season, that is the fourth quarter. Growth of 12.3% is expected, as you can see. This is half the growth of the last earnings season, but it is still solid growth. Why isn't earnings growth as high as it was? One of the main reasons is President Trump's corporate tax cuts, which boosted the last two earnings seasons. Another reason, which I'll talk about a little more in a moment, is a slowing global economy. In recent months, equities have fallen sharply due to a number of factors. It's important to keep these factors in mind when trading stocks and the earnings season. Stocks have fallen due to three main factors: fears over slowing global growth, the trade war, and concerns that the Fed will continue raising interest rates. The first two are linked issues. There is no question that global growth is slowing in many countries around the world, including China, EU countries, and the UK. Some have even predicted a recession in some countries this or next year. While it's true that the US economy remains strong, if global demand decreases, US companies will be affected, and growth will slow in the US economy too. The trade war could potentially be the difference between a global slowdown and a global recession, and the trade war is a global one between the US and multiple countries. It isn't just a localized trade war between large countries like the US and China. Investors want to see an end to the trade war as soon as possible. Sluggish global growth and the trade war have pushed stock prices down. Interest rates in the US are a matter of plenty of debate. President Trump has heavily criticized Fed policy, and investors have been worried that as the global economy slows down, now is not the right time to continue to raise rates. Higher interest rates usually slow economic activity, and if the US economy does slow down this year, high rates could eventually push the US economy into a recession. But so far this year, the Fed has signaled that it will be data-driven on rate hikes. Previously, the Fed was suggesting 2 rate rises this year, but for now this number seems to have been cast aside. The markets appear to want no rate rises this year and potentially a rate cut towards the end of the year if there is a slowdown. These are factors to consider when trading stocks, if you are trading the earnings season on a short-term basis. Now that we've considered a realistic or even slightly pessimistic view, let's consider the positive in trading the earnings season and stocks. A good earnings beat will tend to send stock prices higher, regardless of the wider market. December's sell-off was necessary. An argument can be made that stock prices were overpriced and have now factored in the global slowdown and trade war. Expectations for company results are lower, as are stock prices. Positive earnings results will reassure markets and stock prices will have further to bounce back. The US and China recently held talks which both sides said were positive. This has improved market sentiment, although a deal remains some time away. On this graph, you can see how stocks in the S&P 500 or USA 500 dropped sharply in December and have been gradually recovering since the beginning of the year, as investor sentiment has improved. In fact, stocks got off to their best start in 13 years. So let's take a look at some individual stocks. So this is Microsoft. Those of you old enough will remember for years Microsoft was the world's leading and most valuable company. Since 2003, the corporation faced antitrust issues and competition from all sides, eating into its profits. But the company has turned itself around, and at the end of November last year, overtook Apple and again became the world's largest public listed company. Since then, on January the 7th, Amazon has claimed that title, but Microsoft's comeback is remarkable. The company has refocused its operations and now makes huge profits from its cloud computing business. Many tech stocks such as Apple and Facebook have fallen since October and saw a particularly bad December, but Microsoft's stock price has outperformed all of the major tech stocks and the vast majority of the S&P, growing by 20.47%. On the other hand, Apple and Facebook have had a difficult 2018. Over the past year, Apple has fallen by some 13%, while Facebook has seen a decline of almost 20% over a yearly period. Apple has fallen on declining global sales of its flagship iPhone products, following the announcement at the last earnings season's conference that it would stop releasing official figures on how many iPhones it sells, as the company tries to restructure its business away from the iPhone. On January the 3rd, CEO Tim Cook cut its sales forecasts, blaming a worse-than-expected economic slowdown in China. The trade war has hurt the company, and President Trump has threatened tariffs on iPhones and insists the company should move operations to the US. Despite Apple's problems, the core business is excellent, and better than expected earnings would likely boost its stock price. Facebook has faced headwinds and a barrage of criticism from all directions, which helped cause the 20% crash in its price over the year. Regulators in the US and EU are deeply unhappy at privacy breaches at the company, and Facebook has been subjected to fines and consistently negative media reports. There has been talk of disagreements in its management, and some investors believe that a senior executive needs to signal a serious change to the markets. Whether this will involve the resignation of COO Sheryl Sandberg is still a matter of debate. Company fundamentals remain solid, but analysts are concerned that Facebook has peaked in terms of active users. Still, there is an opportunity for a bounce back if the company can produce good earnings and finally gets its house in order. Of course, we at 4Trade will be following the earnings season and its impact upon stocks very closely. So please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that this earnings season will present. Until then, goodbye, and please join us again at 4Trade soon.